Most of the listeners are already familiar with, large multifamily assets, but they may not be as familiar with the insurance requirements or things that go into it.
The first thing I would say is look at the roof. If the roof, even from a satellite, looks old, that's your first, $500,000 mistake if you don't know how old the roof is. Google the address. You'd be surprised how much information you can find just on the news articles of the surrounding area. 1960 to about 1982, there was a copper shortage. And so they started using aluminum wiring instead of copper. And unfortunately, the aluminum wiring been known to cause fires.
There's also physical condition of the property, right? When you think of wiring, plumbing, what kind of things should investors be looking at physically on the property when they're evaluating that could affect their insurance?
The first thing that I would say is
Hey everyone, and welcome back to this week's episode of the Apogee Wealth Podcast. I'm really excited for our guest that we have today. He's an expert in a specific niche of the multifamily investing world, and that niche happens to be all things insurance. And so if you're a multifamily investor, you probably know insurance plays a big role on your multifamily investments, not just from a standpoint of it's an expense that you have to account for, but it's something that you really need to consider to protect your investment along the way as well. And so today, honored to have JT Lynch joining us on the podcast. JT, welcome.
Yeah, thank you. Thank you for having me. Happy to be here. Kind of worked with you on and off here for a while now. Now we've run in the same circles. So seen you at a few events. So yeah, happy to be here and lend a hand to your followers and help any way I can.
Yeah, well, appreciate your time and as always your help on our insurance of our multifamily portfolio. So I guess just to kick off, tell the listeners a little bit about yourself. Who's JT? How did you get started in insurance? And kind of how did you get in that industry? It's definitely a very niche one, as I mentioned.
Yeah, kind of a crazy story. I cut my teeth. I used to do door-to-door sales, and I ran a sales team going door to door. We did it in Houston and DFW. The company that I was with, they ended up pulling their offices out of Texas. It was an Ohio-based company. And so I was kind of left here going, well, what do I do now? I had a small kid and I was married, and basically door to door, you're successful if you get them late at night and on the weekends. And it's like, do I want to do this the rest of my life? I mean, I was successful. I was making six figures, but probably needed to grow up a little bit and find something that's better suited for my family. My neighbor at the time worked at Liberty Mutual, so I got a job at Liberty Mutual selling personal lines. And I hated the personal line space. They call it personal lines, but it's extremely unpersonal. Go get 10 sales a week and you'll never talk to them again type of thing. So there's no relationship building, and I just hated it. Trying to figure out what I wanted to do from there. I knew I didn't want to stay there. I ended up going to a function, meeting a bunch of realtors at this brewery, and I sit down next to the only other insurance guy there at this table. And it's like, great, I'm sitting next to the other insurance guy. But that happened to be Jeff King. And so I told him kind of my story, had no idea who he was, and kind of my struggles with personal lines. And he said, call me tomorrow. Let's have a beer. I think that you'll like commercial a lot better. And then here I am, 7 years later. And so super fortunate to meet him. And I love this space. I love real estate and multifamily investing. I'm a passive investor myself now. And just truly blessed to be part of the community, which I'm sure you know is extremely helpful. Everybody seems like they're kind of in the same boat of what goals they want, and you get surrounded by high intelligent, like-minded people, the kind of people that I want to be around, and I've learned a lot along the way, just being in this space. So 98% of my book is all multifamily investing, and I wouldn't change it for anything.
That's awesome. It's cool to see someone that's, so passionate about what they work in, and it's helpful for someone like myself who's investing in, needs an expert like JT to review our insurance and make sure that we have what we need. And so, just kind of jumping into that, most of the listeners are already familiar with, large multifamily assets like what we purchase at Apogee Capital. But they may not be as familiar with the insurance requirements or things that go into it. Do you want to just
Right.
maybe give like a high level overview to the listener of what is comprised of multifamily insurance? What are you looking at and why is it needed on a property?
Yeah, so it's actually a lot easier than if you run a business with fleet vehicles and you need work comp and all that. The three main parts are your property coverage, covers physical damage of the property. General liability coverage covers any lawsuits from slips and falls, anybody that gets hurt on your property. And then umbrella coverage to extend your limits past the general liability. And so as you get to become a bigger operator, maybe you do have employees, we can get into work comp, professional liability, crime policies, things like that. But really, the nuts and bolts of it are the property coverage, general liability, and umbrella.
Hmm, very interesting. So when someone's going to look at a multifamily property, right? You mentioned those three things. So you have your property insurance. So you think about disasters or things that could commonly happen. I would say maybe the two biggest there would be hail and fire, if I had to
Yeah,
guess, as
yeah,
far as damage. But you have a lot of other things too, like flooding, hurricanes, wind, tornado. And there's a lot of things that if they were to go wrong, it could greatly reduce the value of your asset, cost a lot to fix that or rebuild it,
yeah,
or it could totally wipe out the asset depending on what it is. And so
yeah,
it's needed from that standpoint, but I think it goes a lot further than that because usually we're getting a loan on these properties, right? And your
yeah,
lender's going to have specific things that they're looking for on insurance as well.
yeah.
Maybe speak a little bit to like how do you guys work with lenders or what are common lender requirements on properties and do you think those are good? Is that just a good thing in general for investors or is it more of a necessary evil?
Um, yeah. So great points. And the interesting thing is all the risks that you're talking about. Fires can be anywhere in the country, but there's a lot of different risks throughout the country that are going to be different. So, if you're in Southern California, parts of Colorado, the wildfire scores are going to be very high. And so that's a different risk than, say, um, Houston or Florida, where the risk is there for named storms or hurricanes, right?
Hmm.
And so the insurance is going to be tailored to that specific asset and what catastrophes could happen there. You mentioned fires, um, also water damage from broken pipes. Those things are going to be at all the properties. And the good thing is you don't really have to guess at what is needed. I get some California investors buying a DFW and they say, we want earthquake coverage. Okay, I'll get you a quote, but it's not as necessary as Southern California, right? And
Hmm.
so you want to make sure that you're covered for the risks that are there in that area. Now, depending on your loan, Fannie and Freddie have more stringent requirements than a local credit union would. It's their property until you pay it off, so they want to make sure it's insured correctly. They're going to obviously tell you we need these types of coverages, which are most of the time what we're gonna quote anyways. There's not really any surprises there. Occasionally they'll say we need sinkhole coverage or something like that, just depending on the history of the area. But they'll also tell you no, based on this asset and the loan, we need the replacement cost value of the buildings to be this amount.
Right.
We need the loss of rents to be this amount because that's what you're projected to bring it to, within the next 12 months. So it takes a lot of the guesswork out of that for you. For us, we will get quotes that, I mean, we can get any sort of size limits of replacement cost that you need, but we don't want to overdo it and we don't want to certainly underdo it. The carriers have their own parameters as well, so you can't say, oh, insure this at $60 a square foot. Well, no, we won't do that. We'll only do it here. And then occasionally the lenders will say, no, we want it a little bit higher. But the lenders take all the guesswork out of that and tell you exactly what you need. And then also, if you want, it's not in a flood zone, but it's very close to a creek that has flooded. It's a 500-year flood zone. It's not required, but maybe you want a little bit more coverage, then you can kind of add on top of that.
Very cool. And maybe talk a little bit, because I think this is would have been particularly useful for me when I started multifamily. There's the geographic considerations that you mentioned, right? Different parts of the country are more prone to different types of disasters, but there's also physical condition of the property, right? When you
Yeah,
think of wiring, plumbing, what kind of things should investors be looking at physically on the property when they're evaluating that could affect their insurance as well?
sure. The first thing I would say is look at the roof. If the roof, even from a satellite, looks old, that's your first $500,000 mistake if you don't know how old the roof is and you get into it and have to have a roof claim. Roofs are very expensive. If you have a roof that's 15 years old or older, then it's going to be valued at actual cash value versus replacement cost. So you're really going to want to make sure that that's addressed at the sale. Possibly get the owner to purchase a new roof, or you negotiate that into the sale, because you don't want to get into a property that is valued at a certain amount, but you immediately have to change the roof over after takeover, and especially if it's in DFW and the next hailstorm comes, the next week, right? So
Hmm.
know how old that roof is and how much life it has left in it. But also, 1960 to about 1982, there was a copper shortage. And so they started using aluminum wiring instead of copper. And unfortunately, the aluminum wiring, it's just not as effective, and it's been known to cause fires. And so properties that are built in that time frame, there's a lot of aluminum wiring out there. We hardly see any bare aluminum wiring properties anymore, but if it was, then it's got to be mitigated with there's pigtailing, coupling. There's a few different strategies to do that, but depending on how many units you have, that's a lot of work, right? And not only will that hurt your chances of getting the best insurance policy, but the lender's also going to require that you fix those things immediately.
Hmm.
Um, don't I'm not going to say don't buy that property just because it's got aluminum wiring, but those are things that you'd want to know and possibly be able to negotiate with the owner before you purchase it. Um, the other thing are the breaker boxes. During the same time period, there's a company called Federal Pacific that came out with stab lock breaker boxes. There's also another breaker box called Zinsco, and apparently they don't break at times when you need them to. And obviously, if they're not breaking, then it can lead to a surge and then a fire there as well. And so you'd have to replace those. Um, that's again, depending on how many units you have, could be a big expense. Just know what you're getting into and know the kind of things that you're looking for during those time periods, and just be willing to do what's needed to and have those capex items set aside. As long as you know what you're getting into, then you'll be fine.
Yeah, that's great. And, probably most of the properties we look at, the vintage isn't such that we run into the aluminum wiring as much, but the breaker panels has been a subject matter on numerous properties that we've purchased and owned, and something we always look for on tours. And if I'm not mistaken, I think most of the time, if insurance doesn't require you to replace those, as you mentioned, your lender will. And so,
Yeah,
kind of like the roof situation, you walk into a 100 unit property and are not aware you're going to have to replace those on day one, you're
yeah,
probably looking at 1,000 to $1,500 per unit just to get all those replaced.
sure. The other thing is you're not going to notice this on an offering memorandum, most likely, but was there a recent loss there, right?
Hmm.
Um, Figure out the loss history, because that's going to greatly change the premiums and deductibles we're going to be able to get. If there was $1 million fire claim last year, um, a lot of carriers aren't going to want that. That would mean their loss ratio is too high for them to take on, And so we've got to find different carriers. Obviously, the rate's going to be much higher, the deductibles are going to be higher. Um, so that could be a challenge as well. So you really want to know everything about the physical property before you're getting into it. And losses are one of the biggest issues that could really hurt a deal for sure.
I hope you're enjoying the content of this episode. I want to take a quick 15-second break to thank our sponsor for this episode, which is Apogee Capital. Now, Apogee Capital is our private equity firm that we allow investors to participate in large-scale multifamily investment opportunities through. If you're interested in being a passive investor and would like to learn more, you can find information on our website, www.apogee.com. Link is in the show notes. Now, thanks and enjoy the rest of the episode. Awesome. Kind of along those the loss runs, let's say you're looking at a property, and maybe I'm kind of jumping the gun here, but one of the things JT is going to ask you for as soon as you can get a hold of it is the loss runs, right? Which is basically just, hey, what claims have we had on the property recently? Let's say we do have a claim on the property. Maybe it was a fire from 3 years ago, or a slip and fall from 2 years ago, or whatever. How do you kind of evaluate that as an investor when you're looking at that, or do you at all? And should they instead just talk to you about it to see what the implications are of those losses?
Yeah, talk to me about it, and then as you get more seasoned, you'll kind of know what I'm probably going to say. The loss history sticks to the property. It doesn't follow the owner. It stays with the property, and it stays there for 5 years. After
Mm,
5 years, it drops off, and the carriers don't care anymore. Okay, so and it also depends on the nature of the claim. So the older the claim is, even if it's 4 years ago, that's a lot better than $1 million fire yesterday, right? And so you also want to know the nature of the fire. So there's a big difference between arson and then a lightning strike. Lightning could strike
mm,
anywhere, but arson means maybe this isn't the best area. Maybe a tenant did it, or their girlfriend or boyfriend. Are they still there? Is this going to happen again? They're really looking for trends and see what am I about to insure, and what are the chances that that loss is going to happen again, right?
right.
Um, General liability claims. Usually, they're on every property. There's a slip and fall here or there within the past 5 years. Unfortunately, there's some pretty terrible individuals that look to game the system and slip and fall on purpose, or look for loose railings and hurt themselves just to sue you. It seems like that's some people's full-time job, which is ridiculous. But those kind of claims are kind of prevalent, and so general liability claim, a slip and fall, you paid out $10,000 to them 3 years ago. That's not going to affect things as much. The biggest thing nowadays is the high crime areas. If they notice that there was a shooting across the street, or just general high crime, and each of these carriers use different crime statistics and different ways for them to look that up. But the high crime areas will lead to policies that have exclusions for firearms, um, abuse and molestation, and certain things that the lender doesn't like, right? And so then we'll have to go find a policy that doesn't have those exclusions to meet lender requirements, if possible. They're usually more expensive. Sometimes, if there was a shooting yesterday, we can't get those exclusions wiped, and we'll have to go to
Mm,
the lender, ask for waivers, show them proof. Like, here, we've gone everywhere. This is all we can get. Go get a waiver so we can close on this deal. Then we're used to working with the lenders. Some are easier to work with than others. If they're a well-known, established multifamily lender, they're going to get it. Like, yeah, we got it. There's shooting. You look it up on Google. Yes, there was a homicide there 3 weeks ago. We get it. So here's your waiver. But it does make things a little more challenging. And back to my point about just looking at the property, look at the roof, Google the address. You'd be surprised
mm,
how much information you can find just on the news articles of the surrounding area, and you'll kind of know, okay, this is a troubled area. Again, that doesn't mean you don't buy it, but just know that that may be a challenge for insurance, and maybe we need to put in our capex some things to make the property safer for our tenants.
mm,
Maybe we need to add a security gate. more lighting, cameras, things like that to make it safer. And a lot of that can be found just from a simple Google search.
If you do those things, I'm thinking of like auto insurance where you have like safe driver benefits. You haven't had a wreck in a long time. So obviously on a multifamily property, if you haven't had loss runs, you're going to get a better premium. Do some of those improvements you mentioned, like lighting or cameras, can that reduce your premium on a property?
It definitely can.
Hmm.
And I wish I could tell you if you install this certain camera to, these places that you'll get 10% off. It's just not how it works. Every year at renewal, we're going to shop your renewal, usually 2 months ahead of time. We start ramping things up. And if you've got certain things that you've done at the property, please let us know. If you've added those items, please let us know because it's our job to create a story for the underwriter showing you as a great owner. You've done these things to improve the property. You've done these things to make it safer for the tenants. Even if it's in a high crime area, my property is not. I've done everything I can to make it safe for the tenants, and that goes a long way to tell that story about how good of an owner you are. They don't care if you planted flowers out front or you changed the signage or painted it, right? You want to look better for them. They're going to look at it on satellite image and your website and all of that. But really, what is making it safer? And we're in a soft market right now, which means premiums and deductibles are lower than they were 2 and 3 years ago. And so take this time right now to do those things. Take advantage of lower insurance premiums to make the property safer because insurance it's cyclical. It's going to go up and down. The next two big hurricanes and big wildfires, you can expect the insurance premiums to increase again. Um, if they do increase, if you've taken the time to make the property safer, um, not just for your tenants, but property wise as well, then it won't hurt as bad if the premiums end up going up.
Yeah, all great advice. And just something I'm kind of curious on to backtrack a little, the whole slip and fall thing. You have a resident, you're a property owner, you have a resident, and they inform you, hey, we've had slip and fall, or we're going to sue you because we had a slip and fall. And you're like, oh, I don't know what to do.
Mhm.
What are kind of the steps to resolve that with your insurance?
Yeah, the first thing that I would say is if you ever notice there's a loose railing or there's cracks in the sidewalks leading up to your leasing office, or there's just potholes everywhere in your parking lot, fix those immediately. Um, Not just because it's going to look better, but people can legit hurt themselves on it, but also
Hmm.
the people that are looking for things like that to hurt themselves on it. Um, you're just a prime target. If there's lights out in the stairwell, things like that, you want to make sure that it's slip and fall proof, if you will, as much
Hmm.
as possible. So, that's why property management companies are so important. They're boots on the ground there every day. Those items need to be addressed immediately. You counted a win if you fix those before a tenant told you about them, right?
Hmm.
And so make sure that you're looking at all those items all the time to prevent those kind of claims from happening. Unfortunately, claims are going to happen. You want to, first of all, make sure that you're documenting everything. Um, you make sure that the area is safe, it's roped off if you need to. Take care of that first, right? Make sure that there's not anybody else that can get hurt. Take care of the tenant as best as you can, as best as they'll allow you. And then let us know that this happened. If we need to make a claim, we will. A lot of times, the insurance company will say, I'm really sorry this happened. How much were your medical bills? It was $5,000. Great. We'll pay the $5,000. Hope you get better. And a
Hmm.
lot of times that's all they wanted. Great. My ankle will heal. I feel good. Everything's fine. And hopefully it doesn't lead into a bigger lawsuit because um, you had a loose railing and they fell from it, right? So
Yeah,
you really want to be proactive when it comes to that, and that's going to help tremendously.
makes a lot of sense. Kind of pivoting a little bit here. Like I said, we have a lot of newer multifamily investors who are listening to this, and you've given us some great insight on insurance. But they're starting out today. They're trying to underwrite deals. They're looking at deals. How do they get started working with JT? Like what's the process of getting to know you, evaluating deals with you, and ultimately getting a deal closed?
Yeah, that's a great question. Usually, the best way to reach me is via email, and I'll supply my email to everybody. But just, yeah, reach out. I'll schedule a phone call with you. Just kind of go over who we are, what we do, and then the best way that I can help you starting out. You're going to have a lot of questions that you don't even know you have yet, right? This is different than finding your homeowner's insurance, which finding your own home and auto insurance is hard enough these days. So we're going to help you through that whole process. We want to be your a part of the team, and that starts from the beginning. You want to have your tax guy, your insurance guy, the guy on your team that underwrites deals, the guy on your team that can find money. It's almost like a bank heist, right? You got to get the safe cracker together, the getaway driver. You got to do all that before you rob the bank. So get your team together, and then it's a lot easier to when you find the right deal to be able to underwrite it correctly, purchase it, and then manage it, right? And so reach out to me. I'm happy to be your teammate, and I'll help with your underwriting as well. Jonathan, I'm sure you've seen that OMs will say, "Oh yeah, the insurance is $400 a door." Well, is it? The T12 is sometimes inaccurate as well. I think sometimes they put just their general liability insurance on there, but nothing else. And so I will give you an estimate based on quotes we've received in the area of like kind properties. That is real market, real time, what we're seeing and what we can expect. And that'll help with your underwriting drastically. Maybe it's a little higher than you thought. Fine, but at least you know what you're going to get into. I'm usually pretty conservative when I underwrite as well and give you those estimates. I'd rather you be happy with a lower premium when you're purchasing the property than surprise you with something higher. Um, as we mentioned before, you may not have the loss history, but sometimes it's pretty obvious. I know you've seen properties where there's an empty slab where it looks like a building was there. Yeah, there was a fire at that building. What happened to it, right? So sometimes the owners can't hide from that, even though they try to. But just get as much info as you can to me. I'll get you an estimate. You'll submit your LOI, and then once you're in best and final, let me know. Then we'll take a deeper dive into it. Try to hone in that number even more, and then once you get under contract, I'll send you a list of items that we'll need for underwriters, like the roof age, loss history, and some other things. We'll get it to underwriting. And as a broker, I don't just have State Farm. This is what the quote is. Just, I can go to a number of different carriers. We've probably got 20 that we can go to depending on the asset, and we'll take it to as many as we can, and have them kind of bid on it to give you the best options, premium wise, coverage wise, and that will meet your lender requirements.
Yeah, that's fantastic. And I can just tell the listeners, as someone that's worked with JT for a while and obviously underwritten a lot of multifamily deals, like when you're going in to put a serious offer on a property, you need an estimate from JT. Otherwise, you're going in blind. There's so many times where I've thought, oh, insurance, and I obviously look at a lot of insurance premiums on property, so I have a general idea, and sometimes I'm right, but sometimes I'm wrong. If it's in a negative direction, you definitely don't want to be over offering and then have to go back later and be like, hey, actually, my insurance was off, so I got to lower my offer. And on the opposite side, if it's a competitive environment and you're trying to win a deal, and JT comes to you and says, actually, no joke, I feel really comfortable. We can get this lower than what you were thinking.
Yeah,
That may be the juice that you need to get the deal across the finish line. So definitely worth your time to reach out for an estimate. Um,
absolutely. And my agency, we've specialized in multifamily for over 40 years. So the properties you're looking at, we've most likely already seen before. We
hmm.
may insure it right now, have insured it before. We probably know the owners, probably know the broker that's on it. So there are some strategic things that we may be able to steer you towards. I love telling the story. I sent an estimate over to one of my clients and I said, oh, and I increased the rate a little bit because of the fire that happened 6 months ago. There was a fire here? Yeah, yeah, you didn't hear about that, huh? And so that killed the deal for him, but I already knew that. I believe because we had insured it in the past and somebody else had looked at it and we saw the loss history. So I'm in the weeds with you guys, and sometimes I can give you a little bit more insight than maybe the OM is indicating. And our estimates are pretty solid right now, and so a lot of the brokers are reaching out to us to get estimates to put on their offering memorandum to make that even better. So we may already have, and I'm sure you've seen it, that our quote is there already on the offering
Yeah.
memorandum because the brokers want to get it right too. So not just buyers, but even the selling brokers are using us for these estimates.
Yeah, absolutely. JT, thanks so much for taking the time for, helping share with our listeners just a little bit about insurance. It's something that in my mind was really confusing when I started in this industry. I definitely didn't understand it and needed a lot of guidance, which, Ramey King was definitely able to provide. Any parting advice or thoughts you want to give to listeners before we sign off?
Sure. There's so much to know. Just like you said, insurance. You're not an insurance expert. You got to be able to kind of swallow your pride a little bit and delegate these things out to experts, and that's going to make everything so much easier for you. Get your team together, know who your experts are, and use them, and trust that they're going to do the right thing for you, and that'll make everything so much easier, so much less complicated, and allow you to use your superpower for your team, and that's going to make all these acquisitions so much easier and cleaner. Wouldn't you agree?
Yeah, absolutely. Like I said, probably the best advice given to me on insurance was reach out, get to know JT, get a quote, because that'll really help you hone your numbers in. And over time, you'll begin to learn a lot of these nuances we mentioned, like physical condition of the property and floodplains and loss runs and all this. But like JT said, you don't have to be the expert, especially from day one. And so reach out and get the expert to help you on it for sure.
Yeah.
JT, really appreciate your time on this. I know you mentioned email is the best way to reach out to you. So we can put that in the show notes. Any other things you want to provide as far as contact info or
No,
ways people
follow
can
me
get a
on
hold of you?
LinkedIn. Yeah, follow me on LinkedIn. I'm going to put out at least an article a week,
Mm.
kind of little tips and tricks of the trade. So that's a good follow. And reach out anytime. Happy to help. I mentioned before, there's a lot that you don't know that you don't even know. So something comes up. AI is a great tool. So use that. But if you need a little further explanation, let me know. Happy to help. Like I said, we're 98% of my book is multifamily. We've been doing it for over 40 years, and happy to help and show you some different tricks and strategies and things to help that property improve even better.
Awesome. JT, thanks so much for joining us today. And all the listeners, thanks for taking the time to listen in. I hope you found this episode valuable, and we'll see you next week on the show. Thanks for tuning into the Apogee Wealth Podcast. I certainly hope you found something valuable in this episode that you can take with you and apply to your own investing journey. If you found the show valuable, you can subscribe so you don't miss further episodes. And if you'd like to learn more about ourselves or our company, you can visit our website, www.apogeemfc.com. We have a ton of educational resources that I'm sure you'll find quite valuable. Until next time, happy investing.